All right, here are the spot gamma levels for today. Good morning, everybody. So we made it through another month, end of quarter. This candle close gives a lot to the analysts that have been waiting for this to make decisions. We got earnings season kicking off really soon, second week in April. You can see we don't really have a whole lot of impactful things on the agenda today. Mild to medium. But we do have Fed speakers. European Central Bank President Christine Lagarde speaks today, 11 o'clock. Williams at 3, Waller at 4. So full house. We're getting PCE data today, and I've heard some people say this is the most impactful thing that we've got for the entire week this week. It's possible. I don't want to say that it isn't. I just don't see it. So we'll have to, really keep your eye on the clock, see when it's coming in. It's at 8:30. With that in mind, understanding that if this is going to be a significant pre-market economic event, then we've seen those moves before. We know, really what that's going to look like, up or down. It should break the ranges that we define. So we have a market maker move. That is a check mark towards that idea that this morning's econ could be significant. If it wasn't anticipated to be significant, we wouldn't see a market maker move this morning. So that's one check mark. The volume is really light. It's below 100. That's another check mark showing that the market is waiting on data before it participates. Everybody's in a hurry up and wait. Let's see what we get kind of mode. And we can see that between these two tools. So even if we didn't know that there was CPI, PPI, PCE, if we didn't know that there was some economic report this morning, we would still see that there was something the market was waiting on. And we might not know what it is, but we would know when it is. It'd be this morning. So, it's kind of the idea behind these tools. Most of the time we know what's coming in the morning, right? We know there's an economic event, but there's times where we don't see what's going on. We can just see the actions in the market, kind of recognize that they are standing aside for some reason, which is a warning and a heads up to get ready for some crazy stuff. We have an MDP yet again this morning. It's 3 in a row. If you have followed through with my suggestion and listened to some material on the missed daily pivot, you'll know the significance of 3 in a row. We also have this nice topping pattern, first time in a few days where we've, gone into the close, rallied all night, gone into the close, rallied all night, got into the close. We didn't rally so much all night. Right? We got a reasonably decent range. The IB was really narrow, but we long since moved past that. The Globex low and high have already been tested. Nice little double bottom there. And this looks completely different than what we've had over the last 2 days, as it should, right? When we've had volume in plus 100 in the overnight hours for the last 2 days, and now we've got volume below 80. The ADR is 1.8%. That's the average daily range. Half of that range would put us at 41.17. If we measured all of that range, it would put us at 41.54. To the downside, that'd be 40.44 and 40.07. But that's not all we have on the agenda today. We also have that market maker move, which is another 0.34%. And we can round it up, we can round it down. I'd rather handicap it a little bit, round it down to about 0.3. And that would still give us over a 2% move on the day. A 2% move that wouldn't even be considered an outlier event. It wouldn't be like, wow, it's just, yeah, whatever. We moved 2% today. That's no big deal. So a 2% move would put us at 41.64 to the upside. The thing is, if we really start to get out of control today, I don't think 2% is going to do it. If 2 is the norm, kind of, just an everyday walk in the park, then if things start to get out of control, we're easily going to get another 50% of that. So what's 3% look like? Well, 3% gets us to this measured move line, 4,200. That makes a lot of sense. So that's the market maker move combined with the ADR and a little bit of what if we really push. And that's not reaching, by the way. Even getting all the way up to 4,200 today would not be extreme. We're not even looking at a 2 standard deviation move at that point. To the downside, a 3% move would get us past the 50% mark on the measured move. It was the reversal point that I had called out earlier in the week. That was last week. All the weeks are starting to blur together. So this 50% mark is based on this red week here. It's the biggest week, and we've been inside of it since then. So a pullback today with some significance to match the market maker move and the ADR with a little bit of wow behind it puts us down at 39.64, right around in that area. And it still wouldn't exceed last week's low. So even if we did get that kind of a pullback, we would still be within the range of last week, which means we didn't go anywhere this week, and it wouldn't even be seen as a significant pullback. That's not even a crash and burn level. To get through that, by the way, to make that kind of a move, we'd have to get through the open 4081, break back through this double bottom Globex low, finally get to a daily pivot that we haven't hit in 3 days, get back inside last week's price action, so last week's high, then yesterday's low 4061, and then all the way down to yesterday's total low instead of just the RTH low at 4050. We'd have to break through all of those pivot points, and we were not even at the spot yet, right? Because the spot is much farther down. So you can imagine that if we go to the downside today, there's a lot of levels that we'd have to break through. 10-day, 30-minute volume profile. We're building a lot of volume up at this level already. And we can see how we haven't really spent that much time looking at the TPO versus how much volume we've got at that level, looking at the volume profile. So we ran into a significant level of resistance. A lot of liquidity was just parked, sitting up here, waiting for us. So when we got into that level, we activated all of that volume, all of that trading. But we haven't been here for very long. By Monday afternoon, we will have lost the lower portion down here. So the volume profile is going to be a lot narrower unless we expand today to the upside, say 4150 or 4200. If we are to break back to the downside, the double bottom that I mentioned in the Globex coincides with this volume here. It's the last line of defense. When we get through that, we got an air pocket down to 4040 with really nothing to slow us down or help us out. Once we get to 4040, then we start running into all that trash, all those pivot points that I had mentioned. And then it would be a fight until we get down to, say, 3950 or 3930. It is possible that we get to that really low level today. Just keep in mind how extreme that would be, right? To get to, say, 3950 or 3960, this 50% mark. So it would have to be some really bad data. And that's not expected, right? The expectations are that this data point today is supposed to come in with expectations of very little change. Positive change, yes, but still very little. And there hasn't really been a lot of talk on it, right? When I was listening to Bloomberg this morning, it wasn't their number one focus. The ex-president getting indicted was their number one focus. So they're not looking at this and pushing this up as, a surprise event. And one of the things that always gets me about a situation like this is when they talk and they act like they already know what the numbers are. Oh, we know it's going to come in heavy. We know it's going to come in light. No, they don't. They don't know. They ask 20 people and they get a consensus, and then they say that's what it's going to be. So if 18 people say, I think it's coming in light, then they start acting like they all know it's going to come in light. And that's usually pretty dangerous, because if it doesn't come in the way that they all think they know it's going to come in, then we get those really big moves. But there's the other side of that coin where they don't talk about it at all. And usually that's because the expectations are in line. Everybody's got this idea that it's going to be some yawn report, no big deal, wink, nod, Bob's your uncle, and so nobody looks at it. If we get surprise numbers today, the word surprise in there ought to give you an expectation of what's going to happen to the market. The market doesn't like to be surprised. So I pointed out these really large move levels that we could hit today. But there is the other side of the coin. The idea that we really just don't do anything. We get a little bit of violence, the market shakes around, and we just stabilize and hold this high, hold this range for the rest of the day into the close. All we have to do is stay between 4,100 and 4,050 for the rest of the day. That's it. Go into the close for the weekend, and they'll talk about what an amazing week this was. We don't have a VPOC from yesterday to carry forward, but we still have those three below us. 39.60 is the extreme level that I had marked out, which is just above that 39.52 VPOC down here. Along the way, one of the pivots that we didn't recognize on the other screen is this 40.43, which is a VPOC from Wednesday. It would be just above Thursday's floor pivot. That floor pivot's at 40.41. We're looking at 40.43, close enough. $40.50 is basically yesterday's low. And I added 4,100 because I figure if we get a little bit of an overshoot, just for the initial violence of it all. But I'm giving a lot in that, right? That's 12 points from our current spot to 4,100. So if we do just get some normal everyday run of the mill inline numbers that the market really doesn't respond to, then it's very likely we just hold this and go into the close, that we don't get some big move. $40.50 to 4,100, nice tight 50-point range. We got a very divided market this morning. That old phrase of a rising tide lifts all boats. Not today. Not today. We've got tech down and what looks like finance up just from comparing these two indexes, the S&P and the ES. The S&P and the NASDAQ. That makes more sense. 10 years flat. We got nothing, right? We're still sitting exactly where we were on Tuesday, Wednesday, and Thursday. So nothing, right? From Monday afternoon to now, we've done nothing in there, but we are pressing on the lower end of nothing. So if we break below that 3.5, call it 3.54, then we're going to start running to that 3.33 disinflationary trigger level. All right, the dollar's up mildly from that 102 line in the sand. We kind of needed to get through that if we were going to see another leg up in the S&P. And so we still need that, right? We need to get below that 102. For a move to the upside, 103.5 It's going to kind of be a line in the sand to see the S&P break, pivot, and head to new lows. So, that's a pretty wide range between 102 and 103 and a half that the dollar can just chop around. And as long as it's still chopping around and the 10 years still chopping around, the S&P is just going to continue to chop around. It's not much of a surprise there. When we get on the other side of lunch, you're basically good to go other than Fed speakers. So, something to kind of carry with you for today for 0 days. You should have a pretty clear afternoon. Other than the fact that you got these guys out there chipping teeth. All right, so Europe had a lower CPI than anticipated. Their previous level was 8.5. They were expecting 7.1 and they got 6.9. You would think that'd give them one heck of a boost. And there's nothing here. So either, they took the news in stride and everybody's happy, but they're still waiting on our data point, or maybe there's a revision that hasn't hit yet, right? When they go back and revise numbers. Either way, they are inside day. And while they're still at the top of the day, that's a really muted day so far, considering they had some great news. So China didn't do so good. Had an inside day breakout, failed to keep it, faded back down. It closed above the 50% level of yesterday. So it's not bearish yet. Just wasn't a really nice follow through after this 3-day run back up, right? They're above all the major moving averages. Going to have to look for some follow through starting next week. But, not really an auspicious end to the week for China. Japan, really nice follow through. Think about the fact that they closed down on the day, but had a really nice recovery later in their afternoon. So they closed way down here and then opened way up here. Got this gap closed. Maybe I misspoke. Maybe they didn't close that gap. Okay, no gap close. Missed the gap, faded back a little bit, still managed to close green and managed to keep the gap up. Again, a really muted end of the week. Massive expansion, no argument there, but once the market actually opened for them, they didn't get very far. It kind of bodes for us, right? That 50-point range that I pointed out earlier and said, unless these numbers really shock and awe, we're very likely just going to hold this 50-point range, go into the close. Wow, nothing. Nothing. 8% of the NASDAQ is up this morning, 0.5%. This is a market waiting on a reason. Very likely with these end of quarter values. Maybe CTA repositioning. I think it might be a good day to go make some cookies. That's true. JP Morgan is going to be managing their caller today as well. I don't have the levels right in front of me. They're mentioned on Spot Gamma though. Let me bring up Spot Gamma real quick, because if they're close enough to these zones that I've laid out, we'll very likely pin on one of them. So I like their sentence there at the end. Simply said, it's hard to draw any conclusion or get any edge of the trade's impact. And another thing that's clouding the water is the quarter end flows. Thank you, Colleen. That's awesome. 36.30 buy to open, 30.60 sell to open. That would be 40.65 sell to open for the call side. So the put side, 36.30 and 30.60. And then on the call side of 40.65. And I know that visuals help a lot. So seeing it is often better than hearing it, right? And we can see that Spot Gamma laid out that 40.65 and points to, that elevated gamma, absolute gamma. It's a large 300 mil versus 50 just a few days ago. It's smaller than the 400 on SPY 405. Sticky upside creates a drag to the upside movement, which syncs with the performance of recent quarter ends as shown above. So let's go look at that 40.65 real quick. It's well within side today's ADR, which is at 40.77. I got my box top at 40.80. We could overshoot in the earlier part of the day, shoot right past that 40.65, and then end up coming back to it and pinning on it. You can see the weekly expected move yesterday. We broke outside of it, closed beyond 40.48, which is this week's expected move. And we closed pinned at 40.50, which is not it's not a shock, right? It's not a surprise right now with everybody piling into the front end and playing 0 days. The S&P will close on these quarters and zero levels way more than it statistically should. You wanted to play some cheap YOLOs, right? Some shenanigans. Start laying out butterflies weeks in advance. Pick them up for 5 cents a piece. It's $5. You can't even get a coffee at McDonald's for $5 anymore. Scatter those butterflies all across the quarters. 4,000, 40.25, 40.50. You can do them daily if you want to. It's $5 a day, 5 days. It's $25 per level. You only need one of those things to pin, right? Especially if you're going out a week or 2 weeks. Pin a butterfly out there, 30 strikes wide. That's 3 weeks old. Buy a new car afterwards. You only have to hit one. I know. And now I got you thinking, right? I do need a new Lexus. Implied move for today, by the way, is 1.2%. And the 5-day move range, we're going to call it 150 points. No, 250 points. Just kind of do a little rounding there. 3850 to 4100. We're far below that zero gamma. Excuse me, we're far above that zero gamma. 4017. Really? All right, so we can add those levels like I just did on TradingView. So 40-50 large gamma level and 40-65 is going to be a significant level. And it ties right in with that JP Morgan collar. So and for the ES, labels aren't showing up, but whatever. There they are. Large gamma 4100 and 40-65 is the other level of concern. Yeah. And again, I mean, we got nothing, right? And looking at the fangs and a little bit into the semiconductors, NVIDIA down 0.5%, AMD down 1/4, but a whole lot of the market, just nothing. And remember that differential we've seen between the S&P and the NASDAQ this morning. We're not getting that rising tides point of view when we've got the NASDAQ pressing against the lows of the day and the S&P holding near VWAP. Yeah, NASDAQ's well underneath that VWAP. S&P's just bouncing off of it again. So we need to see a real change come through here, and it's not going to be in the S&P or in the NASDAQ that you spot that change first. It's going to come from the 10-year, the dollar, the bonds. Something's got to give. 15 minutes, I'm rounding up a little. 15 minutes until the econ. Once we're past that, the only thing left that can shake this market is going to be one of those Fed speakers today. Once we get through the morning part of this, unless we start to break this range top and really get going, I'm very likely going to go make some cookies and chillax for the rest of the day. I don't want to play around in this chop. So you got your levels. Take some time over the weekend to really consider these end of quarter levels and end of the month levels. For an example, take a look at Apple. I was laying out, the new levels. Let's kind of get rid of this stuff. So depending on your broker, you might not have a quarterly candle. If you don't, you can use this old school trick where you take, your 3 monthly candles and use their high, their low, the open of the first month and the close of the last month and build yourself a quarterly candle. I know it's not the same, right? But depending on your broker, you kind of got to work with what you got. So these are the quarterly levels for Apple. I've got a linear chart on. So strong finish on the quarter. It's a bullish Marbozu. Nice breakout from the last quarter, but we're still inside this massive, big monster candle from last year. For a monthly bullish candle, bullish Marbozu, inside month breakout, finishing really strong so far, unless we really get a pullback in Apple today. We're still maintaining in July's candle. You know, we came outside of it for 1 month and came right back in again, but it's still the dominant candle. And we're coming up into that candle's top soon. It's going to be basically 164, 163 and 63 cents. $162.50 is the close of that candle, and it looks like we almost hit it and pulled back. And this is just one market, right? You're going to want to go through at least some of your bigger FANG names with the financials completely broken up, right? The big moves that we've had in the financials, probably a lot of work to do there, going through the charts, really identifying key levels that it's going to have to fight through to get back up again. And keep in mind, we got earnings coming, right? Second week in April, banks are going to kick off this earnings. And what do they got to say that's really going to save things? We haven't honestly really seen a lot of analysts change their perspective on a lot of these names. So earnings is going to be a really big deal. Going to kind of set the tone for the rest of the quarter. $162.51, almost tagged that in the pre-market today. We got Nat Gas down, K-Web again, starting down. Remember, it started down yesterday, and then those China ADRs just flipped over and took it right back up again. Bitcoin down. So when we kind of go through that checklist, right, a lot of times this week, we've been able to point to China ADRs with Bitcoin and semiconductors all up in the pre-market with financials. And we're able to say, yeah, these 4 groups or these 5 groups are all up in the pre-market. And then we get these bullish follow-throughs through the day. Granted, it's been choppy and, you know, intraday hasn't really been all that amazing, but we had all those groups in the mornings. So yesterday we didn't have K-Web. It came back in later in the day, but we still had all the others. Today we don't. So finance is up, KRE just a little bit, but not even up enough to hit my benchmark, 0.5%. Gold slightly, barely up. Everything else is just holding its breath, waiting on this news that's coming out in 10 minutes. Everybody have a good week. And I'll see you guys on Monday.